Welcome to Your Lettings Journey, a brand new podcast that's essential listening for landlords with property in North London. Now, everyone will have their own unique landlord journey, from the way they get into property to the way they hang up or pass on their keys, and then all the different decisions in between. But along the way, we're all faced by many of the same issues and potential pitfalls. I'm Rachel.
And I'm Ramesh, and together we have a lifetime of experience as landlords, letting agents and tenants that we want to share with you to help you navigate your lettings journey.
So if you're an experienced landlord wanting to make sure that you're keeping on the right side of all the rules and regulations, or if you're completely new to this game and don't know where to start, then this is the podcast for you.
Your Lettings Journey is produced by Belvoir Enfield and Central Housing Group. For more information, visit belvoir.co.uk/Enfield and centralhousinggroup.com.
This week on Your Lettings Journey, we're tackling the tricky subject of mortgages. Where do you start with that? Well, if you're in the middle of a fixed-term mortgage, or if you're coming towards the end of one, then you're possibly a little bit concerned right now. Will your rent continue to cover your mortgage payments? Will you pass your lender's stress test? Is now the time to change your product a bit early? Or maybe it's actually the time to look at selling all or part of your portfolio. With answers to these and many other questions that are probably on your mind right now, we have Turan Ali, mortgage broker with Q Mortgages. I hope you enjoy. Okay, so this week I'm joined by Turan Ali. So hi, Turan.
Hi, Rachel. You okay?
I'm very well, thank you. Yes. And you?
Cool. I'm very well, thank you.
Good. Okay, so for the benefit of everyone, this is actually take two on this because take one had some technical issues. So... which will be good because we're going to start in a different place. But actually, The first question I am going to ask is for you to tell us a little bit about yourself, because although you are the co-owner of Q Mortgages now, you have had a long and varied background. So can you tell us briefly what got you into the mortgage world?
Yes. I've always been a sales guy, so always working with people and clients and always been customer facing, should we say. So worked in retail, wanted to come out of retail because obviously retail commands long hours and weekends. Yeah. So I had a new family and decided I wanted to try something new. Always have loved property. I guess we all say that, right? But I do. I love property. Went for an estate agency position. Tried to become an estate agent because I thought the sales would really suit me and just love the fact that someone trying to buy their own home. And in my final interview for quite a large estate agent, in my last interview, the guy right at the end just looked at me and went, "Have you thought about being a mortgage advisor?" And I said, "No, not now." I said, "I haven't. I was actually just trying to get this estate agency position, if that's okay with you." And he said, "No, actually, I'm going to actually stop this interview and I'm going to go and get the director for the mortgage firm to come and speak to you." And so basically, I ended up getting an interview with him, and they actually offered me a position as a trainee mortgage advisor some time back in 2000 and God, I'm counting the years, 16, I think it was, 15. So so that was a long time.
That was a while ago. Yeah, that's a while ago
absolutely.
Now. Okay.
So went into the industry as a trainee program. Tried to do my CMAP. It was quite hard. My little one was just born at the time, so I do remember the pain of trying to study and have a screaming child. But yeah, long and short, worked there for a couple of years, and then the industry changed, and that's when we had a bit of a crash, and just kind of fell out of industry. So since then, have been doing a number of business development roles, again within construction and property and software, and then came back into mortgages about 4.5 years ago. Actually, it's been about 5 years now. Got back in with a large directly authorised firm, worked in their head office. We did quite a lot of development finance, portfolio landlord business.
Okay.
I was an advisor there, and then essentially became a trainer for new mortgage advisors. So I would, I forgot the word that I was. What was I? I used to basically look after new brokers and take them through their first 5 cases. And then I started doing the training, development, and induction. So good experience. and then you just realise that sometimes, you want to do things in a different way. So Q Mortgages was born.
Okay, so how long ago was Q Mortgages born then?
We started in 2000 lockdown. So the week we handed our notices in, I think it was the next day they shut the country down.
Timing.
So
Perfect.
yeah, unbelievable. Yeah, well, I had plenty of time to develop my website. So I remember in lockdown sitting there doing the website. We couldn't go live because the FCA closed down and put everyone on furlough. And we actually had quite long delays getting our FCA register approval application approved. So yeah, it was over lockdown that we were actually trying to start the business.
Wow. So you're thinking at that point, oh, I've made a mistake here. This is God's way of telling me you should have stayed where you were. Go back to retail. Become an estate agent.
Yeah. Absolutely. Well, it was just bad timing because we went from employed roles to having absolutely handed our notice in and not being able to work. But we couldn't have started in a tougher time with no clients. And and not to go on for long, but our initial plan and how we looked to start a Q Mortgages business was all about going out and doing networking events and property events. And that's where our focus was. And then when when the country shut down and there's no networking events anymore.
No networking events.
We were like, where are we going to get our business from? So we've literally started from scratch, which is probably what not a lot of mortgage advisors do, because they normally will start a business with an existing book of clients. We started with zero.
Okay. Wow. Yeah. Okay. So just thinking about.
So we're doing all right.
So you've been open for 2 years, effectively. Then have you now? Going on for 2 years.
Yeah, it's just over, isn't it? Yeah. So it's just been over. So,
okay. All right. Okay. And you were talking before about when you were working before as a mortgage broker, and then there was the crash. So 2008, what have you?
Yeah.
Just to go straight to the point. Are you thinking we're in the same position now? Should we expect this to be as bad as it was then?
That's a good question. Well, I guess, no, I don't think so. And I guess my only understanding, because again, I was working for quite a large firm that were paying brokers. They weren't getting the business, so they were actually trying to, persuade people to take redundancy. Maybe there are some large firms that are still doing that now. I wouldn't know if I'm honest. If I look at if business has gone downwards. Maybe ever so slightly, but we're still relatively busy. We are still doing new sales. So for residential, I'm still doing mortgages. I guess it's area dependent. There are a number of areas that seem to be quiet and had a slowdown in sales, but there are some areas that are still selling properties.
Okay, but in terms of a likely property crash or anything like that, which I don't know if that just makes good newspapers or what have you, but there is obviously talk about, property prices are going to go through the floor and all that sort of thing. Do you think that is likely in the position we're in at the moment?
Look, possibly. I mean, I think one thing I've learned is I keep watching the news and it's always the scary stuff, I do think we know anyway, we know how the news works. They seem to publicise the high level, they make it sound really scary and people panic off the back of it.
It becomes a bit self-perpetuating.
Yeah, absolutely.
As well. It's like, if you say put out positive vibes and positive things will happen. It's like, no, let's say there's going to be a crash and then everyone will panic and they'll all want to sell, and it's just like, oh my gosh, stop.
Exactly. Well, I just saw it yesterday on the news. So, we obviously did this yesterday, but then only yesterday they had on the news about a landlord decided to sell up his property. Now, I didn't catch all of it, so I don't know the full article and how they explained it, but it's a landlord selling his property, panicking. But the way they positioned the news article or the interview was that this is what everybody's doing. And that's not fair, because if you're a landlord and you've watched that, then you'd be like, well, hold on, what am I missing here? And they did the same with news, because with the rates, they said that lenders are pulling rates. And I know you asked me that question only last week. Are they? Yes, but not how the news said it. So it's not like all the lenders pulled the rates, stopped lending, and have pulled mortgage offers, because they haven't pulled any offers. I've not experienced it. I've not had any of our offers being pulled by a lender at all. All that happened over the last couple of weeks is lenders pulled out of the market, to go away for a couple of days and reprice and come back.
Okay.
So at no point was there no lenders, because a few went today, a few went the next day, and vice versa.
Yeah.
So my answer to your question is, do I think it's going to crash? I don't think we can afford for it to crash. I think we can, this country will maybe find its way through these interest rate hikes. There are going to be some casualties in residential, with residential mortgages, homeowners. There are going to be, and there are going to be some landlords that are going to have to sell up or decide they don't want it no more. But as we know, we will get through this, and I'm sure there'll be a way. I don't think there'll be a crash, though. I don't think we can afford to do that.
I think you're right. I think landlords are generally quite a hardy bunch, but they do seem to be focusing on, the rates are going up, rents are going up. They can only go up so far. Landlords can't pass a stress test and everything else that they might be given, and therefore everyone's going to be selling up, and that's it. And I mean, I do regularly have conversations with our landlords about, certainly particularly at times when the tenants have just moved out, or when it's time for renewal of a tenancy, and they need to they want to increase the rent, but they're thinking, I'm going to have to remortgage soon. I know it's up soon, and I don't think, we can't increase the rent that much. What would it be worth, Rachel? How much is it worth if I sell it now? And so you have that awkward conversation about, rents are going up and they're very high, but it's not a fabulous time to be selling. And I could sit here and tell you, yes, it's a wonderful time to be selling. But if you have a tenant in place and then you scare them by trying to sell the property, you're going to have an empty property, which is just as bad in a time when people aren't actually buying. So it's a regular conversation that people are having. Now, when we talked yesterday, and I said to you, what is the one tip that you would give any landlord at the moment? You gave me a tip that I thought would be a good place to start. So I'm going to ask you again, what is your tip for landlords?
So let's see if I can deliver it as good as I did yesterday, because I think yesterday I said it quite well.
We have to cut and paste. We'll cut and paste, don't we?
Yeah, please do. That's why I'm sitting in exactly the same position, just in case you need to do so.
The same clothes.
Same clothes, same position. So I guess my main tip is to anyone, whether it's a residential or buy-to-let landlord, is talk to a mortgage advisor. Talk to a broker. I'm not going to say don't go to banks, but a broker who has full access to look at a variety of options for you. Now, and the reason why I have this tip is because I said to you, I work with a firm where we specialise with development finance, bridging, buy-to-let landlords, portfolio landlords. We looked at transition from limited company, mortgages in own name versus into limited company. And one of the things we would do is look at a strategy. And so, so we would get a landlord that will come up and say, look, I've got 10 properties, but I need you to look at a new property for me, or I'm looking to refinance one. First thing I would say is, well, tell me what your strategy is. What are you trying to achieve here? And, what we won't look at doing is just doing that one transaction. I need to understand what you're trying to do with your portfolio. Is your portfolio about growth? Do you have plans to grow it over the next couple of years, 5 years, 10 years? Is it all about paying? And you gave an example yourself, someone that you spoke to said, pay down your mortgages. So again, is that an option? Are you looking to pay down the capital? Are you trying to get your mortgage balances down to zero? Whereas on the flip side, some people were looking at keeping their loan to values quite high and keep refinancing to keep purchasing. So my key tip, going back to what you said, is consider what you want to do, what you want your portfolio to look like, and we can appreciate that may be changing now for a number of people. What are you trying to achieve from your portfolio? Okay, and talk to a mortgage advisor that can look at your portfolio in exactly the same way, and manage it for you. I gave you an example. I spoke to a client who came my way. He had 20 properties. I think it's 22 actually. Was looking to buy a new flat. So I just said, tell me about your portfolio. What's your plan here? And for someone who's a seasoned pro, has had the properties for years, was a bit taken back by my question. Because I'm asking him, what are you planning to do with this portfolio that you've grown over the years? And he said, well, why are you asking? And I said, well, I'd like to know what your strategy is. What are we doing here? Because I want to manage your whole portfolio for you. So, to make it as easy as pie, and I can advise you what we need to do at what time, whether it's to buy another property, selling, when we're looking to refinancing, 2-year, 5-year. And I've looked after this portfolio for two and a half years now. And we're at a point where he will phone me and say, can you look at property 114 with the address details? Tell me what we can do. And I know we'll go and say, right, if we're looking at refinancing, we can capital raise X amount. Here's the deals. Here's your 2-year. Here's your 5-year. Where we're going to be in 6 months' time. So that would be my.
Okay, and I like that. I do like that.
Yeah.
I know.
If that makes
sense.
Like I hope so.
For me, there are two things that you say there. Number one is all about strategy, and I think there are. Am I going to be that vague? There are definitely landlords out there who possibly don't have a complete strategy. So I've met a few who are just sort of like, oh, that seemed like a good, something just came up on the horizon, a neighbour was selling a property next to one I've already got, and so I decided I'd buy that, or I bought the house next door just because I wanted to know who was living there. And it's like, it's not actually a strategy, that's just things happening.
No.
And then we were talking to a portfolio landlord last week, and he didn't have an exit strategy at all, and he was into HMOs and things. It's sort of like, okay, you need to have a strategy. So that would be the first thing, is what is your strategy, and being conscious of if you're investing in property, what is your strategy? But then in addition to that, I think the second thing about what you're saying is to have a broker that you work with who you can have that open and honest discussion and relationship with about, okay, these are my plans. This is where I am. This is everything I have. This is all of my finances. This is what I plan to do. This is where I want to get to. And I need you as an expert to help me get there. Because I think there's quite a few people who don't have that close relationship with their broker. If they even do have someone that they say, that is my broker, rather than that is just a broker that I know.
Yeah, absolutely.
So getting off my soapbox a little bit again, which I have a tendency to do, get on my soapbox. But yes, so strategy and broker partner is what I would say landlords need. Now, I think for a lot of the landlords that I speak to, there are those who are quite happily at the moment sitting in the middle of their fixed term. Particularly if it's a 5-year mixed term, and not getting too concerned. I think anyone who's in a 2-year, which is probably come to an end now, but on the way to coming to an end, or potentially midpoint or something through a 5-year, they're getting a little bit nervous. What would you say the options are at this point?
Yeah, so just to clarify, the point for someone who's coming towards a fixed end of a fixed rate.
Yes, sorry, I keep talking about
No, because you said 5 years. So I guess look.
Sorry.
No, not at all. So there are. So you've got a couple of options, and I'm trying to think of the few examples of what I've done recently for clients. So if your deal is coming to an end with your current lender, you can, dependent on the mortgage provider that is currently with, there is a time frame as when you can look at renewing, looking at new deals with the same lender. Okay, so some will have a 6-month window, some will have 3 months. Okay, so with our clients, we have a list of all of the deals, which will flag up to say X deal is ending in 6 months' time. So we'll always approach our client and go, you do realise that this property, your mortgage is coming up to an end. Let's start looking at your new options for you. Has anything changed? Is this just going to be a straight for like remortgage? Do you need to capital raise? Are you looking to sell? So we'll have that conversation with the client. Again, strategy, what's changing? How do you feel about your portfolio? What do you want to do? So from a client's point of view, what can they do? We can look at either sticking with the same lender and taking over what they call as a rate switch or product switch. Just means literally, here's your outstanding balance. Here's the new mortgage rates. Which one do you want? They don't do any checks on the client. They essentially just switch them straight over to another product, and that will then start when the current deal ends.
Okay, so with that one then, with that one, the stress testing that people are getting very concerned about, that doesn't happen if you stay with the same lender then?
Yeah. Yes, that's correct. Okay. That's correct.
So all those people who are thinking, I don't want to hike my tenant's rent because they're lovely, lovely people, blah, 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 which is all perfectly valid. If they've had a tenant for a very long time, then, maybe they know that this tenant can't afford the increased rent. So for those people, if they stick with the same lender, they don't need to go through that stress testing.
They would literally just take a 2, 3 or 5 year. If there's a 3 year available, most are 2 and 5. There are some providers that do a 3.
Okay.
So we've had a few. I'm just trying to think of the ones that we've done recently. Literally, it is. Yep, these are the deals available to you. Pick one. It's quick because essentially, you just literally will select the deal and then it just rolls into it.
Okay.
We have had to do some remortgages as well. But remember when I say, we're selecting from. If we stay with the same lender, the rates are quite competitive. Depending on who we're looking at, they're not always going to be the cheapest deal, because you may find typically if you went to remortgage, you may find a lender that's got a better rate, but then you have to weigh up the associated costs with doing so, because you're going to go through legals. Again, if you have a limited company, you're going to pay the additional legal fees in terms of directors guarantee and what have you. If your broker will charge you to do a remortgage, so you have to weigh up all the costs, valuation fees. So moving across for a small percentage cheaper versus all the associated costs with moving and any potential product fees as well is again something we weigh up with our clients and say, look, these are the costs with staying where you are, and these are associated costs with moving across, and we'll advise you which one the best deal is. So the options are, as I said, stick with the same lender, or we look at another lender and we move somewhere else. Recently, I've had to move one of my clients somewhere else, and he is going through that process of legal work and what have you. It's definitely an option. But then when we do move to another lender, then we're going through the whole application again. And then we'll look at the stress test, what the property's worth, the rental income versus the rate, and that will ascertain how much you can borrow. It's quite tough. I mean, I'm saying quite tough as a conservative way of saying this. It's almost impossible, should we say, to get a buy-to-let mortgage on a 2-year deal at the minute with a 75% loan to value.
Okay, so what sort of loan to value are they looking at then?
Less, probably about much less. To fit on a 2-year deal. You're probably looking, don't quote me, but because this changes, and by the time we finish this podcast, we've probably had 10 emails saying that rates are changing. Probably between 60-65% is probably, I'd say, an accurate-ish guide as to where a 2-year deal will fit. Anything above that is going to be a 5-year.
Okay, so if you are a landlord and you're thinking my strategy is that as soon as things start improving, I'm going to sell up or whatever, but I want to have a 2-year deal, and stress test wise, or I don't have that 65%.
So sorry.
Hello.
I told you he might.
He's going to go now, isn't he? Yeah. Because let's hope nobody comes to the door. Oh dear. Okay. So they can't get to that 60-65. So what are their options at that point? They've only got 25% equity. What's the options?
So it's tough because again, that's a tough one. So if you're looking to remortgage, then you're going to obviously. You will only fit with it. If you don't fit with a 2-year deal, then you can either look at a 5-year deal. There are some deals that you can look at, maybe a tracker, which is not favourable in this market. But you might have to, but they would maybe potentially come with a no early repayment charge. Okay, so I guess again, if we've got someone that's considering selling, we weigh it up. And as an example, we actually did do it with a client. I gave you these numbers yesterday, and your face was a picture when I said it. So I'm not sure if I'll get the same reaction.
I'll try and do that again. I'll try and do it again.
Try and do it again.
Okay.
Brace yourself. Right. So we had a client. We had a client. His mortgage, his rental. Sorry, I'm so sorry. I'm looking at my notes and I can't even read my writing. Couldn't read them yesterday either.
One of us is going to be surprised here. It is.
His rental was $1,650 a month, so he's achieving $1,650 a month on rent. He had a mortgage balance of $325, and his previous payments were $485 a month. Yeah. So there was probably around about just under £1,200.
Yeah. So healthy profit every month.
Healthy there was.
Yeah.
His new deal, taking it up to his new deal is basically £1,600 a month.
He's going to make £25 then or something.
Yeah. Actually, I think it's 16, just over 1,600. So he's basically just about breaking even with this. He took a 2-year deal, and he's decided that he's going to market the property. We don't know if he's marketed.
I mean, that's a massive difference, isn't it? Because you've got a lot of so we had a landlord on a couple of weeks ago, and he was a pension landlord, and so he said, the income from his rentals is what pays him his monthly pension, basically. Yeah. So you can imagine if somebody comes along and says, well, actually, you're only going to make £20 a month on this going forward. The hassle, the potential, void periods and all the rest of it, or maintenance or anything like that is just, well, actually, is it financially worth it? No.
No,
but he'd have had a better deal on the 5 years, though, wouldn't he?
Yeah, absolutely. He would have done. It might have probably been a little bit cheaper, to be honest. So I guess again, it just comes down to where are we? But it doesn't. They're not all like that for everyone. So let me not scare you for anyone who's listening to think, oh, a 5-year deal with these high rates is the only way forward. It depends on loan to value, where you are, and your portfolio. So again, going back to funny enough, the same guy that I was saying that's got 20 properties that I looked after. We've literally just done one for him. His deal's come up. He said, can you look into this for me? And I found him a suitable deal. He's actually got a 2-year fix because his loan to value was a little bit lower. And we've just fixed it straight onto a 2-year deal for him. It hasn't quite had the same huge increase as the other deal as well, so it's not all that bad. Okay, so there's us saying don't listen to the press, and then we're delivering these really high figures. But it's not all that bad. It just depends. But there are a few people that have seen an increase. You could be. I would say that at least a 50% increase on your mortgage payments is probably the minimum you should expect.
Okay, and so
which is worrying in itself.
It is worrying, but I think most people are sort of bracing themselves for it, I think, if they're not already experiencing it. But one of the things we were saying is not knowing whether rates are going to continue going up for a little bit, and so you were saying about going 6 months early to see if you can secure a new deal 6 months early. Is that a relatively straightforward process?
So there's 2 ways of doing that. So you can if you look for a new mortgage. So we can look at a new mortgage, which means we can apply today, and then we get a mortgage offer which lasts for 6 months typically. But again, with some buy-to-let ones, they're a little bit shorter. Okay, so they could be 3 months. So it just depends. So it's definitely there's no rule for all lenders. So I don't want to say 6 months in advance, where you might be with a specific lender that only does 3 months. That's why, hence, speak to the mortgage advisor. This is who I'm with. We will know which lenders you can look at, which date you can start looking at which dates. You can look to refinance. So this goes for residential and buy-to-let. But we can look to refinance to a new lender. You'll get a new mortgage offer which will last for either 3 months or 6 months. And we normally try to get that so that I'm literally doing one now. So the new mortgage offer will take us up to the end of the current fixed deal. Okay. And we have that in place. Should things change, should rates come down, it would be lovely if they did drop as dramatically and as dramatically.
Can you imagine? 2 years
nice.
Time. 2 years time, we're back at 0.1%. That'd be lovely.
Oh, wouldn't it be? We'll have to dig this out as well, won't we?
We saw it coming.
and then and now, exactly that. So you can. So it's just all about managing. I mean, we would do that. So you can do that. An application now. If rates come down, great. We can switch the product over and take a lower rate. But if they go up, at least you've secured something now.
You've secured it at that point.
What you don't want to do is, my one tip not to do is sit there and watch the market and think, actually, I won't pull the trigger now. I have got a client who this actually doesn't even. He actually has experience as well in property, so it's not to say someone who's got one property who has got less experience in doing this sort of thing knows less, because we all sit where we think it's comfortable. But someone who watched the market, his deal came to an end, went to standard variable rate, saw the rates increasing, thought, actually, I think I'll hold on. Went up a little bit more. Okay, I think I'll hold on. Hoping that they were going to come down because they didn't want to fix at such a high rate. Well, they've continued to grow for 6 months, and now we've just fixed at a much higher
than he would have done.
It
Oh
was.
dear.
I mean, the thing is, in his situation, he had the margin because he was sitting at it's a 50% loan to value on his portfolio.
Okay.
So yes, he's not quite in a situation where his mortgage is the same as the rent, and he's still actually making a decent yield from it. But if we rewound back and said, should we have done this at 6 months ago when I said we should have secured something, he'd probably would like to do that. So all I would say is, do not wait behind the phone.
Don't
watching
procrastinate.
The news, watching the market.
Yeah.
Don't do that. Yeah, pick the phone up and speak to someone. Find out what your options are today, and then at least you know that you can then monitor moving forwards, and then you know where you are. Should you know to proceed now or wait a little bit, shall we say?
Okay. All right. So with the whole stress testing and the 65% rather than the change in the loan to value amount, is there anything happening that is more sort of, they're being more careful about the sort of properties that they will now do buy-to-let mortgages on, or the type of tenants, or the type of landlords even, or anything that they're being stricter on with those things now?
Yeah, that's a good question. No, not that I've noticed. Okay, so
it's a good question, but no, Rachel.
It's a good question, and it's not that I've noticed, and I don't know why that is. It's not because I've been relatively busy. So no. I mean, I don't want to say no, they haven't, because there's always someone somewhere that will listen to this and go, well, actually, I've got an example of this that they have. But no, I've not noticed any criteria changes. I wouldn't say that lenders are not looking at certain types of properties now or favouring certain types of tenants or landlords. Criteria isn't changing and hasn't changed that I've noticed of. The only thing that's changed is the ability to get the mortgage because of the new rates, and that's really it. So no, we've still got the same lenders using the same income, looking at the same minimum incomes. They have not changed. Again, as we know, with there's properties that are maybe slightly different, maybe a high rise or something like that. But I wouldn't say that the lenders are changing their appetite towards certain properties. We've not noticed any issues with the valuations. So they seem to be okay. So no, I wouldn't say that that's something to worry about.
Okay, so with things becoming slightly more unaffordable, quite a lot more unaffordable.
Yeah.
We touched very briefly. Yeah, massive understatement. We touched very briefly yesterday on the mortgage charter.
Yes, we did.
And the fact that while a lot of it is a little bit vague or what have you, there's no clear provision for buy-to-let mortgages.
That's correct.
Would you like to expand on that as fully as you possibly can? What is happening with the mortgage charter as we know it? And why are buy-to-lets excluded so cynically from this?
Yeah. So the mortgage charter, they've announced obviously for residential mortgages, and the only thing they've really confirmed that they're doing in this is basically an option for a residential mortgage to go to interest only for 6 months. Or extend the term back to where it originally was, which is something that they wouldn't do before. So I don't know if people know, but years ago, and I know we're switching into remortgage residential at the minute, but let me explain the residential and then we can look at the buy-to-let. So years ago, interest-only mortgages were much more easier to obtain. You just walk in and say, yeah, we want it on interest-only. We have got a repayment strategy. Some lenders didn't really check. And the issue we find ourselves on is, further down the line, people are coming up to the end of their mortgage term. They've not been saving as a repayment strategy, and it's harder to refinance their pay off the mortgage loan without selling. So interest only are much harder to get nowadays than they were before. So the fact that the charter has made this an option and that so many lenders have signed up to it is a good thing, because it's much more harder to obtain an interest only mortgage on a residential property at the minute. So the charter just means, 6 months, you can switch it over to an interest only. After 6 months, it refers back to repayment, or you can extend the mortgage term, and that maybe take it from 20 years to 25 years. Again, that means it will make the interest, the payments a little bit cheaper. It again then refers back to the original. That's the only two things they've really confirmed. They've also said that there is an option to speak to the lender about deferred payments and things like that. I don't quite know what that means, because there's no lender that's come out to say what they will and won't do. I guess it's going to be on a case-by-case basis. Whether that means they'll give people 3 months, 5 months holidays, I don't know, because no one has actually come out and said anything different about that yet. So that's what the charter looks like. Why they've not extended it to buy-to-lets is a really tough question. I don't know. I mean, we look at the Conservative Party, and they seem to be not really doing a lot for buy-to-let landlords. No. And this is something that they've bypassed. I don't know why. I don't know, and there's probably a million people that wouldn't know the answer to that question. I guess if you look at the charter and you cross-reference what they've done in the charter and how, if they implemented the same rules for buy-to-let, then there's not really much they can do, because most buy-to-let mortgages are on interest-only basis. So the big tick in the charter is they've allowed people to go from repayment to interest only. Well, that wouldn't work for buy-to-lets because it's already on interest only. Extend the term, again, won't make a difference because it's on interest only. Extending the term would make no difference in the mortgage payments. So the only thing on the charter, on the resi, that would potentially be an option for buy-to-lets is deferring any payments, which is what they allowed to happen over COVID. Which they allowed a number of buy-to-let lenders to go on a holiday to then be able to pass that. And I guess that may be the issue why they've not done it, because if we look at what they did over COVID, they said to landlords, okay, don't pay us, go on a holiday break, and then that way you can pass that holiday on to your tenants who have been affected by COVID. Well, the mortgage interest rates are not affecting tenants.
They're not?
Directly, in terms of their income.
Really?
In terms of income. I mean, the only way
it's not direct. You're right, it's not direct. But it is, because there's lots of reasons that rents are going up. But but obviously absolutely. The increase in a landlord's outgoings means that they just say, well, I have to cover that by you. Yeah, exactly. Yeah,
exactly. But if you look at comparing what happened, because I've read a few articles and people referring back to COVID times, why we're not doing the same as COVID. Well, I guess if you look at tenants, a number of tellers, they were all affected by, a lot were affected by COVID. We were all sitting at home. We all had impact. So I guess they were saying, look, instead of your tenants not being able to pay, let's do this. Maybe this is slightly different. Again, look, I'm not on these seats, so I don't want to be put in a corner here to say what they should and shouldn't be doing. But I guess that's why the charter would have to look slightly different if they did it for buy-to-let landlords. And that's the only thing they could look at doing, because as I said, the interest only and extending term would make a difference. It's whether they allow them to take a payment holiday if they've got a struggling tenant. Maybe that's something that they would need to look at, and whether they do, I don't know. I think it could be an issue. It could be an issue that arises, and there are going to be some landlords that will have a problem. There are some that will manage their way through this, and I think that goes back to, as we spoke yesterday, the buy-to-let market is becoming harder and harder for some landlords. Those that have previously purchased one or two properties as a pension pot, and not just now, have actually probably for the last couple of years been weighing up because of the changes in taxations.
Exactly,
whether it's worth them doing it. I hear of horror stories. I've got actually a personal friend who actually paid. She's got two properties and had to pay, by the time she got all the rents in and stuff, paid nearly £20,000 in tax, and was like, I actually haven't made any money out of this. What's the point? So the only benefit to her is the value of the property growing and her capital, the capital raising, the capital growth.
The capital growth,
but not as a business. Whereas, if you run it as a business, you're offsetting the tax, you're offsetting the rent, the interest, of the payments, and then you're running it as a business. And essentially, these businesses that are running in that such way are not so impacted, shall we say? Yeah, because they can weather the storm. Payments. Yeah, exactly. A little bit more, absolutely. Yeah. And I guess that's where they're trying to probably steer a lot of the buy-to-let market.
Exactly. I think that's one of the key things. You say, why have they left them out of the charter? And it's like, well, actually, they're not that interested in helping out the little landlords, the little accidental or, part-time landlord. It's more geared towards everything they've done, really. Yeah. Everything the government have done is basically saying, we want bigger corporate landlords. And so they're not too fussed if it upsets someone with just one or two properties.
Well, That's looking at the experience, and I've got loads of notes written there, which I won't show you because you won't be able to read them anyway. But if we look at the landlords that we've worked with recently, the ones that have really struggled with this are the ones that own properties in their own name. The little landlords that have got 2-3 properties that have probably, not just now though, but they've probably been weighing up their consideration as to whether they want to do this for the last couple of years.
Yeah.
And then this is just another thing. So
just pushed them over the edge. Yeah.
Which is no doubt the news thing that I watched yesterday on TV, where it said this guy's selling his property, which is going to make it a big impact because everyone's selling their properties. There's no properties to rent. Well, there probably might not be as many landlords doing that. It's not going to be the portfolio landlords as much, should we say? I don't think.
No, it won't be. And I think given the mortgage rates at the moment, I think a lot of those portfolio landlords are the only people who are in a position to buy some of these properties. It's they can do it without a mortgage, and so quite happily snapping up.
Well, again, strategy wise, because if your strategy is if your strategy and your portfolio is managed, you should always be allowing. And we said this yesterday. I won't let my clients have 10 properties as an example, and they're all on 2-year deals. That all finished now because all of a sudden there's a trouble. So you've got to spread the deals across 2-year, and then they all run simultaneously, so you've always got options. We're going back to something else now, but that's all part of strategizing. If you've got to manage a portfolio that's been managed correctly, then the impact is a little bit less, because we've got one with the particular landlord I'm talking about, because I'm only doing something from now. One ends now in the next month, and then we've got another one towards the end of the year. And then the rest are following on from the year after. So we're not going to be, his whole portfolio won't be affected by what's going on in the marketplace now. No.
Okay. But the fact that everything that's going on puts you in a better position to be able to assist him going forward.
100%.
Yeah.
But it also gives him the confidence knowing that, hold on, my portfolio is absolutely sorted. I message him and say, look, unfortunately, we've got one ending soon. We need to look at that. But it's just one. And then, like I said, we're looking at the other options. And when's the next one? Well, fine, we're good, because we've got nothing until the end of the year, until next year. So we might be able to weather the storm, and let's see where we come out at the other end. So, that is key. Look, I'm worth my. Like I said, you said the word. Someone called a broker. He calls me his broker, and I think that's the biggest compliment I can have when someone said my broker. And that's what you need. So if you've got someone that you can call your broker, you're good. If you've got someone that you say, that mortgage guy that I've used before, then I suggest you find someone you can call your broker. Yeah.
That guy that I last spoke to 3 or 4 years ago. Or worse.
I don't know if he's still about. He might still do mortgages.
He may not still be there.
Yeah.
Okay. All right. So we've covered a huge amount. And like we said, we didn't want to add to the concerns that people already have from the news. I think the key things that I'm kind of taking from this is that people should not be just sitting there and procrastinating and burying their head and just waiting for good news or for rates to come down. That they need to consciously think about their strategy and what they're actually doing with their portfolio, or their 1 or 2 properties, but with their portfolio, what are they doing next?
Yeah.
And actually identifying and starting to talk to a broker if they don't have one already, and finding someone that they can have that partnership with going forward to protect them and look out for them over this time.
Yeah.
Is there anything else that you would say people should take away as a key tip from you as to what they need to think about? Yeah.
I guess, look, we've covered quite a lot, and I think they kind of get the gist of, using a broker, and especially a broker that specialises in buy-to-lets, because they're very different to, your residential criteria. Yeah. But I think my key thing is don't sit there watching the news.
I've said that for years.
Yeah, exactly. You read, but it's not even the articles. If you're looking for information, as we know, we're inundated with information, and it can sometimes be conflicting. I'm fortunate enough to speak to agents like yourself that work all across the UK. I will speak to one in one area, says, we're relatively busy. Yeah. You speak to one in another area, said that actually dead, we've got nothing to do, we're not taking properties on, we're selling. So it's different everywhere. But I would just say, don't keep watching the news at 6 o'clock for them to decide what you should be doing, because we've got a lot of clients that are panicked. We've had a number that have come to us and said, oh, actually, it's not as bad as I thought it was going to be. Not all the time, because then we've had the ones where we've come on, unfortunately it is where it is, and it's been higher than they anticipated it being. But pick the phone up, and just find out and ascertain where you are. Not that big wide world. You need to worry about yourself, your number of properties, whichever one's coming up, your portfolio. That's all you need to worry about. And I'd be proactive with that and not reactive.
Okay.
Because I don't know what we can react to at the minute, because we just keep hearing news going up and up.
Exactly.
But yeah, proactive. Pick the phone up. Doesn't matter if your deal's not even up yet. You know, have a conversation. We're happy to do portfolio reviews. We get calls, especially when we work with agents, and say, look, can you speak to this portfolio landlord? We'll have a chat. We'll understand what they're trying to achieve. We're more than happy to look at a portfolio and see where it's sitting.
Yeah.
So, yeah, absolutely. Don't wait until your deal's up.
I think that's a perfect final tip, is get that portfolio review. So even before you make your decision about who is the broker you're going to go with, get the portfolio review done so you at least know where you are.
Absolutely.
So I think that's a perfect note to end on.
Good.
And we'll put your details in the notes and things if people do want to contact you about a review or just to pick your brain about various things.
Absolutely.
Okay?
Yeah, be happy to.
Perfect. And on that happy note, I'll say thank you very much, Turan. You've been a wonderful guest.
Thank you.
Cheers.
Lovely.
Bye-bye.
Thank you.
Bye.
Cheers, Rachel. See ya. Bye.
If you enjoyed this episode, then we'd love your support. Please subscribe, leave a review, and share this episode of the podcast with your friends.
We'd also love to hear from you about any topics you'd particularly like us to discuss. Please send an email to yourlettingsjourney@gmail.com.
Thanks for listening, and see you for the next episode of Your Lettings Journey. Goodbye.
Goodbye.